So, hello. I hope everybody's having a great day. How we all doing? How's sound? Can somebody let me know if sound is okay? As usual, no trade calls, recommendations, or responsible loan stuff. We're here for educational purpose only, and just a little chat between traders. Let's see what's going on. Okay. So again, as always, any questions, any comments anybody has, just put them in the chat box. I'll do my best to cover every question. We don't have any specific agenda here. I'm happy to stay on as long as people are asking questions and there's stuff to look at. If nobody's going to ask any questions, if nobody's going to say anything, I'll just do a quick market update and call it a day. Hey man, how's it going? Thanks for letting me know sound is good. Thanks. So yeah, I mean, here we're at an interesting location across the board. We're seeing a little bit of a pullback, as I discussed on Twitter and in some other forums. Basically, nothing too surprising. Also lining up with seasonals here. The market is started with a rotation out of tech into energy, into the other stuff, but basically that's what's been fueling the pullback. Again, naturally, we've had some headlines that have accelerated some of the moves, but basically the pullback was already in play, right? Hey, Mohammed, how's it going? So here what we're seeing is essentially this failure, right? Which is basically on the 19th of July. This is a Fangman chart. And since this failure here, market's really on high volume, really follow through. The market's really been struggling to hold a bid, right? And as long as this, the big seven, the Fangman can't catch a bid again, likely this is going to weigh overall on the market. And you can see a lot of signs of the fact that the market is tired. For example, you could look at AMD, right? High volume pump here into these highs. We've never regained those. Yesterday, after earnings, volume spike, we're up like hard overnight, and then we closed down 7%. This is not a good look, right? Another one you can look at is Microsoft. We had the big spike, everybody getting excited they were going to charge $30 a month for some AI stuff, and then bam, it couldn't hold that pump, and we're coming all the way back down. So here, a lot of these tech names, they've got big open gaps to the downside. So there's clearly a lot more acceleration that could come to the downside. Now, clearly, everybody's still going to be hoping for Amazon and Apple after the bell today to save the day. But, look out below if they can't do that, okay? So bigger picture here, we still expect to see rotation out of tech. We still expect tech to trade heavy. Preferred position is clearly to be short tech, underweight tech. If you need to have some kind of pairs trade, you might think about, short tech, long energy, short notionally adjusted, short NASDAQ, long YM or something like that. I prefer the outright short, especially if you've been focusing on these moves since July 19th, right? One thing which I was discussing on Twitter too, and I was saying is don't underestimate the importance of the Thursday range, okay? And what does that mean? Basically, if you look at ES, and I tried to explain this on Twitter, basically Thursday, we were pumping higher, path of least resistance, that squeeze higher. And what happened on Thursday, we've got the headline, the BOJ headline. And what this did was it shook the market. It caused the market to have to rethink short term. And then, as if nothing happened, we pumped right after that. And what we were saying is you have to understand that this is an extremely, don't make it hard on yourself. Don't try to analyze the headlines, fundamentals, whatever. It's all about that range, right? So what it means is as long as we're inside this range, it's a lot of chop. The market doesn't have any real impetus, any new information to really do anything, and it's going to be chop. and that range is likely going to be defended until you get something substantial happen, right? And as you can see is, and again, of course, and the edge is to play the extreme, short the upside, long the downside, the bottom end of the range. And you can see yesterday, even on the downgrade, what happened in the overnight session, bam, bottom of the range held. Then, of course, something substantial has happened. Market decides to reposition. The classical bounce into New York gets sold, and we close the day below that range. So here, as long as we close below this range, the path of least resistance is lower. And here, what the bears need to look at is that any rally back into that range needs to be a sell to continue to force the downside. And what you can see is ES is outside of that range. NASDAQ is outside of that range. YM has just broken. It held last night. And Russell still fighting there. So we'll have to see what happens, but this is also highlighted by the action on ES. Once it lost the 10-day, started to trade very heavy. Yesterday, YM lost the 10-day, NASDAQ lost the 10-day, Russell lost the 10-day from a closing basis. So right here, as long as we don't regain that Thursday range, as long as we don't regain that 10-day moving average to put the market more in a little bit of a neutral stance, it's heavy. Now, keep in mind, it's heavy still in the context of an upside rotation, and this could easily correct all the way back into the 4,200 and still hold the bullish rotation up, the 200 DMA. But right here, it's a corrective move. And again, as I was saying, if you're coming into August with the NASDAQ up, almost 50% year to date, and you're expecting it to annualize at that pace without any pullback, I don't know what I can say, but right. So here again, NASDAQ could easily, drop 10 double digits and still be up double digits for the year, right? Easily. So you just have to understand where we are in the context. But right here, it's looking like everything, we're trying to get a deeper pullback, right? And even though the move on equities has been a little bit tricky, the clearest move, really, the nicest trade has been the DXY long, right? As we've been discussing. And here, what happened is, we were trading inside this range, 106, 103, 100. And here, as soon as we tried to break below, everybody started to get excited, talking about 60, 70, 80. That's kind of like the people calling for euro sub-parity, cable sub-parity, yada, 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 when they get excited to the downside. But here, essentially, what's happening is this was a false break, right? And when you get these false breaks, especially from the weekly basis, etc., it's extremely high odds that the market tries to return back into neutral. And whereas a more neutral stance, well, that's exactly at the mid-range, which is the 103. Now, hey presto, look at that. You've also have the 200 moving average coming in line with that. So that's clearly a level that attracts. And now it becomes interesting. So now here, as far as we're concerned, the DXYs moved back into more neutral territory. And now we'll have to see, right? Either you get a situation where the shorts come back in, it can get smashed down, and it could continue this move lower. And likely you'll see equities stabilize and try and get a little bit more upside, or DXY breaks higher because people are going to have to price in the Fed being more hawkish than all the other central banks, whatever you want to look at it, because of deleveraging, because of repatriation, because of risk flows, because of what's happening in bonds. It doesn't matter, right? Bottom line is, if the DXY starts to trade back above 103, clearly it could hit an air pocket and scare a lot of people back to the 106. Nothing much has changed. It would still be inside that range, but you would expect to see a lot more, a lot more panic in markets, etc. And this is, if you haven't been paying attention, also, you have to look at bonds, right? This is a very ugly break on TLT. Essentially, we've been holding this move lower We failed at all these moving averages. We failed to hold this trend line. Lows, lower lows, lower lows. So this is still looking to press lower. And when you get these kind of breaks, right, it is not uncommon for us to flush all the way back into the scene of the crime. And again, depending on how that happens, also in terms of velocity, that could scare the children, right? And if you're looking at it in terms of UBs, that's the same pattern, right? It's very classical. I don't know. It's basic price action. You'd expect it to come back into these lows. Does it have to happen? No. Does that look like that's the most probable outcome, or that look like what the market is trying to do? Yes. ZBs, similar thing. ZNs, similar thing, right? That's what's going on. And as long as that move continues, and especially if the unwind is disorderly in bonds, it's going to cause a lot of problems across the board. People are going to have to adjust positions, de-risk portfolios, et cetera, et cetera, et cetera. So that's really the key dynamic to watch in a context where, again, Google not holding these highs, Microsoft not holding the pump, Facebook not getting any more traction, Nvidia never being able to take out those highs. So here really the question today is, can Apple and Amazon come in and save the day? That's what all the bulls are going to be hoping for. If not, these moves have got more to go to the downside. Euro, that would be a move back. This is a short that triggered beautiful little short, tight risk reward for a move back into the 200. The short failure all at the same time on cable for the move back into the 200, back into the 123. Aussie for a move back to the bottom end of the range. Kiwi for a move back to the bottom end of the range. It's all the same trade, right? It's all the same trade. All started with tech and dollar trying to turn around July 19th. Everything else would just be noise, headlines that helped the velocity of move, but that's the trade that's been going on. Then the other thing to keep in mind, which I've been trying to get people to pay attention to, is once you get a situation where the usual cocaine angel suspects, Nikkei, DAX, and Euro stocks can't hold a bid anymore, you don't buy the dip, right? And you can see here, Nikkei, very ugly failure. Look at this pattern on the daily. DAX, extremely ugly failure on the daily. I mean, does it mean, can it continue like this forever? Sure. Is it probably? No, you'll probably get a violent bounce, but this is not a good look. Euro stocks, ugly failures. People really caught buying the highs with the market being priced for perfection. So you have to be careful, right? You have to be careful here. It's still retracements in the context of an uptrend, but the unwind can be. Gold, what's happening? Why isn't it going higher? Because gold bulls need to be punished for their sins. I don't know. Gold is a dud, right? Really. I think about it yesterday. Gold's not up after a U.S. downgrade. What reason have you got to hold gold, right? If you think about the conditions we've had recently for gold and it's not going higher, you don't need to know why. The market is telling you, right? And this is something which I've been talking about for a long time, and people just don't want to listen. The easiest thing is look at a monthly chart in gold, right? Or look at a weekly chart in gold. Does this look like an area 2000 where you want to get long? Because if you're getting long, if you're buying 2000, maybe you don't have charts available, right? But since 2020, it's telling you can offer to you, sold to you all you want. So is that the central bank action? Is that accentuated by Russia having to sell gold to finance the war? Who knows? Who cares? But ultimately, this is sold to you. So likely, the upside acceleration on gold comes if we can take out those highs and attract new buyers at highs once these sellers are no longer there. I have been trading gold, but I've been buying these levels tying up with seasonals too. I'm not buying the highs. And here, what you likely have is between 2,000 and 1,800 is a huge air pocket, right? A huge air pocket. And what that means is, don't be confused by velocity of move inside range. You can't get, clearly there's a lot of money to be made and lost inside this range, but structurally swing, it's hard to get bullish or bearish as long as we're trading inside this range. So instead of making it harder for yourself, I would just be trading the range, right? So there's nothing going on. Why? Who cares? It's just what's happening. I mean, clearly there's buyers pressing it, but there's a lot of offers up there, so it's just messy. We'll have to see what happens with the dollar. We'll have to see what happens here, but right now it's just stuck inside this range. The bulls are going to be saying, look, every time it dips, there's aggressive buying coming in. And the bears are going to say, every time we get in 2,000, it's getting smashed. So bulls aren't going to change their mind. Bears aren't going to change their mind. But ultimately, we're still stuck in a range. So my suggestion would be to either trade it tactically intraday or trade it as a range trade until it is no longer in a range, right? Extremely uninteresting to me to trade, far more interesting things to trade. Unless you're getting interesting setups like the end of year seasonals, etc. And here we started August with all of retail on Twitter getting excited about August being a bullish month for gold. So everybody was buying the 2,000. I mean, here if the dollar continues to strengthen, it's not going to look pretty, but I just don't think there's an awful lot of edge trading it here. It's just very messy to me. Yeah, I don't know what time frame you're looking at in terms of megaphone on DAX. I mean, DAX is just, everything's going to be trading together here if we're getting some traction. But ultimately, what you can see is that this is not a good level, right? This is not a good location to fail to break higher, because usually new all-time highs are bullish, new all-time lows are bearish. And here what's happening is you've had a very ugly failure. So I don't know, people are going to be talking about all kinds of things. Maybe you'll be looking at some kind of megaphone pattern. To me, it's not a megaphone because this hasn't made a clear new high or a clear new low. Some people will be talking about, I don't know what, 3, 4 black crows, whatever. But ultimately, this is a messy location and not nice action for the bulls in terms of the velocity. Right now, the problem with these patterns is that, especially here, is that it's super messy, right? Because it's hard to get long because you've had all these failures up here. And it's hard to get short because you've got a lot of support coming in here. So if you want to get long an index, there are probably far more interesting indexes to get long. And if you want to get short, there's probably far more interesting ones to get short. But clearly, it's DAX, Eurostoxx, Nikkei, they're all turning, and the mood is heavy across the board, right? I don't trade DAX really. I'd much rather trade the U.S. indices, but you see the different picture, right? So, for example, if you want to get short DAX, you've got a lot of resistance here. It's a little bit tricky, right? If you want to get long, you've got all these previous highs that failed. It's a little bit messy. Look at something like ES, for example, right? If you want to get long ES, you've got far nicer structure to get long ES. And if you want to get short ES on a break through here, it's a much cleaner break too, right? But okay, so the futures contract looks a bit different. You mean on DAX? The future looking different to what? You mean to like the CFD or something? Can you look at the Brazilians, what the ETF, or what do you want me to look at? What is Brazil? EY, EZ, what is it? IND. Okay. What's the ETF? Is it EWZ or something like that? Hey, Gavin. So here, what's happening with Brazil, right? So here, kind of, I don't know if you have a specific question here, but you see how it's kind of hovering. Now, again, guys, it's the same chart across the board, right? If you've got ES, NASDAQ, etc., everything having to pull back into those 200 DMAs, everything's going to pull back. So it's the same chart across the board to a certain extent, right? Now here on Brazil, on the future, what strikes me is, I would say, a choppy do nothing range, which I would highlight like this. And here what it looks like is similar to what we saw on the dollar, right? Inverse chart of the dollar, makes sense? Let's grab this dollar chart, right? Whereas what it looks like is that you've got this sideways range, an attempt to break out, and a failed break. Okay? So here you're going to have a range inside a range, which is kind of this tight zone here, which is going to be messy. But usually on these breaks, it is not uncommon to see this retrace back to mid or unwind the whole range. Here, what the longs that don't want to give up on the false break are going to be looking at, most likely, they're going to be trading with stops below here, trying to hold this for a break higher, and the bears need to flush this, because once this goes, especially from a day close, extremely high odds will come back towards the 200, towards the neutral, towards the mid of the range. So here you've got a little bit of a choppy zone. The false break is no bueno. And the longer we fail to get back above those highs, the higher the chance of an unwind to mid, possibly to the bottom end of the range. The only way I would buy this is on a day close above those previous highs for a ramp to those highs, but only on a sustained break of those recent highs. Hey, my pleasure. That's what we're here for. So that's the way I would be looking at. Comments, questions, don't hesitate to ask. I'll keep on going as long as there's questions. So again, keep in mind, we've also got OPEC meetings today. We got BOE today. We got ISM services today. Be interesting to see. Be very careful on crude. You could get an awful lot of wheeling and dealing on crude. Here, I think, similar kind of theme we've been seeing. A lot of stuff is stuck in broader ranges, right? And the big question is, are we getting breakouts or false attempts to break out of the ranges? And right here, the bears absolutely need crude to stay below the 80 mark to try and force a move back down. But as long as this is holding here, and we, especially if we close above the 80 today, this really opens up the room for a potential move all the way back into the 90. It's a messy one. It's one I wouldn't be too interested in trading here. I don't want to be caught up in OPEC headlines, but clearly it looks like this is trying to run higher. And this is a key piece of the puzzle, right? Because all the people who think inflation's coming down are saying, you know, crude's going to get smashed. We're coming all the way back down to the 70s. That's it. And all the people are saying inflation's going to pick up. They're saying, well, hey, crude's guaranteed to be up to 100 this year. So what's that going to do to your CPI, right? So we'll have to wait and see. I don't have an opinion. I'm going to follow the price. But here, what I would say, especially what you want to watch today, is this psychological and interesting location for the 80 mark, and the daily closes above really opens up 90. Daily closes below, especially on funky headlines, opens up a flush back to the 70. But I would say the range here is 90, 80, 70, very choppy inside this range. Yeah, yen. I mean, you want to keep a very close eye here on the Japanese 10-year. I think it's probably going to try and make its way back into the one far quicker than people expect, but we'll have to wait and see. In terms of USD JPY, what's going on USD JPY? Well, it's frustrating a lot of people. And here, what you've got basically is it's in an upside rotation, similar to risk, right? Because it's trading. And that upside rotation looking for a move back into those highs. Now, my base case assumption is that these highs were significant highs and that they're going to hold, even if it's sloppy. But it's a tricky trade to put on here. So ultimately, you've got a big pivotal level at the 138, 136 with the 200 DMA. And as long as we hold above here, it's going to be very hard to press the short side with any real conviction. If we break below that, close below the 200, I think from 136 even to something like 126 could be very quick, right? So I think here, the long is a tricky one. So gun to my head, I'd be short. A break above here on a stupid squeeze or something, you could see an aggressive move back into these highs. But here, clearly, the risk reward is to look for tactical shorts. The problem with the tactical shorts is that you still have a lot of structural support around 138, 136. But if it clears that, you could get very, very big move, very, very quick move to the downside. Likely you have to see the market panic a lot more than it's doing now for that to happen. But that's the way I would be looking at it. Any comments, any questions, any chart anybody wants to look at? We've been going for about 30 minutes. Happy to stay on as long as there's questions. If not, we're going to call it a day because I think we covered. Yeah, one thing which you have to pay attention to, and it's be interesting to see Amazon and Apple, because if you look at whether you look at something like TSM, they really didn't have a rosy outlook for the future. Texas Instruments also. If you look at what Qualcomm said, etc., everybody's pointing to kind of higher inventory, slowing demand, China recovery not as good as it supposed to be. So again, I think there are a lot of headwinds here for tech in general. People just refuse to price those in because of the AI craze. But if you look at the individual components, a lot of these names are still struggling here, really. Cable, so BOE. So I think here, what is it? Most people are looking for 25, possibly 50. It's probably all going to be down to the guidance. I think unless it's something big, this will likely just trade with the dollar in general. But right now, my base case assumption, without keeping in mind BOE, whatever, was that this turn is a turn for a move back into the 200 DMA 123. Okay. This is still an upside rotation, so it could easily come all the way back down and still hold a bullish trend. But that's the way I'm looking at it, okay? The way I would look at this into the BOE is I would say, you see this previous high, it's kind of in line with the 10-day moving average. Let me just check. DR3 coming in 129-ish. So what I would say for today really is that any move that cannot take out this previous high, the 10-day moving average from a day close, is likely a corrective bounce for a continuation lower. If we get a day close back above this previous high, back above the 10-day, you would have to think that the market is trying to rip back here and something substantial has changed and the dollar is probably going to turn across the board. That's the way I would be looking at GPB today. Getting some good more questions today is good. So, any comments, any questions, anything anybody's looking at, anything anybody wants me to discuss, more than happy to keep on going if there's questions. Okay, looks like we've covered what we needed to cover. Guys, thank you so much for hopping by. If you'd like to give me a little like to boost my ego on the YouTube channel, it would be helpful. It's not going to change. Even if you don't, I'll still do the monthly update, but it'll make me feel better about myself. Hey, Luca, my friend, how's it going? So again, we'll do this again in a month. Be careful here. Things could be a little bit funky. I think there's an awful lot of opportunity. There's probably going to be a lot of trading to be done in the next 10 days before that slow month, that slow week in the middle of August. And keep your powder dry. Keep your position size small. The moves have a potential to be fairly big. So even with a small position size, it could still be meaningful. So again, I will. Hamid, thank you so much. Okay, guys? So have a great day. Have a great week, and catch you guys next month for the next one, okay? All the best. Talk to you guys soon. Thank you so much for spending some time with me. Bye-bye.